going on, guys? Welcome back to my channel. I go by the name of Aphiwe.Zunguu on Instagram and TikTok and whatever. But welcome back. If you're a returning subscriber, please hit the subscribe button and the notification bell so you're notified next time I drop another bang. So yeah, I'm back. I'm back. I'm back with another video. It's been like weeks actually. It's been like weeks without me posting. I was writing exams and da 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 da. But back as we are back again. So yeah, in today's video, I'll be basically teaching you how to support and resistance on how to trade support and resistance. Right, I'll be doing a few examples showing you how to trade support and resistance and also doing a market breakdown for you. So it's like a 2-in-1 video, so please do hit the subscribe button. Let's get this video to 20 likes. 20 likes just to be something like, you know what I'm saying? Because like I'll be really exposing or basically unfolding a lot of secrets that traders don't want to show you or share with you all. You know what I'm saying? So all I'm just asking for is a subscribe and a like down below. That's all I'm asking for. Right, but let's get into the video because I don't want to waste anybody's time. So last week we took a few trades in AUD. Took a few trades last week. We reviewed so setup, and this is what I saw. Like I'm gonna put the picture up. But this is what I saw on UAD before like the market actually happened, and this is the whole trade completed, and we took trade. Oh, we took Nasdaq. It was Nasdaq. We took Nasdaq. Nasdaq should take profit, and we missed 20 USD to be honest. We missed it, but other than that, we couldn't hit us on stop loss. But yeah, we stop loss above entry and then we hit us out on stop loss. But yeah, we also killed that trade. So those are the trades that we took last week. Also, Euro. USD sorry, also USD we took it to get us out on stop loss. Stop loss above entry, we put stop loss above entry, and then we hit us out, and those are the trades, right? So I'll be teaching you how to trade support and resistance in today's video, right? So let me just clear out everything. Right. So I don't want to waste everybody's time. I just want to get straight into the market. Right. So let's go with gold, right? So every time when we analyze, we gotta start from the weekly time. So I hope everybody's writing this down. So every time when you start from the weekly time frame, you come in on the weekly to look for two options, right? The first option, you're looking at the direction, right? The direction are going towards the upside or going towards the downside, right? The second option that you're looking for is you're looking for the momentum, right? Exceeding or decreasing, right? On buying or selling, basically. You're looking for the volatility, right? So as you can see, from your weekly time frame, you can see that the highest point of the market is about the gap, and the lowest point near the current market price that the market created as over here. So we know that the market is playing inside a form of a consolidation trend, basically. Right, you can see that the market is playing inside a consolidation trend. Right, from there we can easily zoom forward to basically see everything. Right, because there's nothing that beats zooming in. If you're zooming in, it's basically like you just want to see the market more clear, saying. That's why a lot of traders, they use big screens, a lot of screens. They want to see the market more clear, because using the laptop only doesn't allow you to have that advantage of seeing the market clearer, right? So backing down from like a weekly to daily, and if you just refer to charts, teach you on a skill that nobody actually told me, right? So how I use it, guys, refresh my chart, guys. I refresh my chart and then back like four times, right? Because if I go down the fifth time, I can't see the candlestick. So I just go down the fourth time and then I just see what's happening at the current market price, right? So today I will be teaching us support and resistance, right? So as you can see, where the market has been playing, you can see that the market created a weekly creation over here. So if I go to my line graph, I can't see that weekly creation, right? So I'll be teaching you about vertical support and my horizontal support, right? So I'll be teaching you why I put these lines like this, right? I'll be teaching you why I put these lines like this. So the reason why I put these lines like this is to allow me to have an edge in the market, guys. It allows me to basically see the market more clearer, of being like, oh, the market might turn in these certain areas over here, right? What do I mean by that? As you can see over here, previously the market was playing around in this area, right? So imagine if I took a sell from here, right? Imagine if I took a sell from here and struggling of where should I put my take profit, right? So I can basically see, be like, oh, this is an area of sensitivity. Let me put my take profit over there. I take profit over there. When I put my take profit, the market gets my take profit, and then the market starts retracing and returning back. You know what I'm saying? It also helps you in terms of like that, of being like when you need to put your take profit. It also works as like support and resistance, basically, right? Because we all know at resistance we buy. I mean, at resistance we sell. Sorry, at resistance we sell, and then support we look buy opportunities. It also works as support and resistance, but like it allows you to think more quicker, allows you to think more quicker and in a more efficient and fast way, right? Because as you can see, maybe like if I took a buy from these areas over here, right? I took a buy, the market bought, the market bought, the market bought, and then over here the market start retracing, right? It's still in the daytime frame. Over here the market start retracing, right? So I understand it being like, oh, the reason why the market is retracing, right? It's because of this particular area over here, right? As you watch my previous videos, I probably taught you all about how many touches does your horizontal line need to be, right? As you can see, this line over here, it is called your horizontal line. It is called a horizontal line, right? So if I have to analyze further, right? So what we're looking for actually, right? What we're looking for is we're looking for areas that have 3 or more touches, or 3 or more turning areas, right? Recently we can see that we have 2 touches over here, so it's not a valid area, right? 2 touches still, it's not a valid area. 2 touches still, it is not a valid area. But 2 touches still, but yeah, that's 3 touches. So 3 touches are valid. So we're just looking for areas that have 3 or more touches, right? We're not gonna analyze everything. We're just gonna look for areas that have 3 or more touches, just for demonstration, right? Just for demonstration, to show you where or what am I looking for, right? So you look at the previous data and you also look at the current market price. You use every factor that is happening on the screen right here, right? You start from looking from the left and you look from the right, right? So you use this analog that the market already printed out, right? The cross section of the market code already printed out, and something like a waypoint or something. So if you can just like put it whenever, just look from the left to the right, and then you'll be like, oh, is it a sensitive area? From left, from left to right, left, right, left, right, to basically understand where the market is forming, right? So as you can see, right, I don't want to say all areas, but like majority of areas, right, that have two touches. What do you do when an area has two touches, right? So what do? You use the short horizontal line and you just put your line like this, right? So I usually use the color yellow to basically understand, okay, if the market comes to the yellow line, I understand that, okay, it's a less sensitive area. So like if I do wanna cut my trades short, I can, but I understand that, okay, it has two touches only. It's not that strong. You know what I'm saying? So if an area has like two touches, you can easily put that, or you can easily put a trend line if you want to put a trend line or whatever. You know what I'm saying? So I'm just gonna end up over here as the market created this low, right? So I'm not gonna like diving deeper into the markets, right? Because all I'm just want to teach you is how to use support and resistance in your advantage, right? As you can see, right, from judging from what the market printed over here to over here, right, we can see that the market was creating some sort of like weak rejections, right? As you can see, the market was respecting market structure, but it was also breaking out, right? The market was respecting market structure, but it was also breaking out. So easily we can open up our support or we can open up our rectangle to cover up these big rejections. We can open it up, or it's up to you. If you don't want to open everything up, you can just put it like just to cover the weak rejections, to understand or have like a background. Market is probably gonna move in this particular manner, right? Understanding the fact that the market can break this horizontal line, but also come back and also respect it. It requires a lot of practice, right? So I'm not trying to force you to understand anything in this particular video. Just take some time, take your own time, understand it, watch it over and over again, and surely you will understand it. So as the saying goes, you can't force something. Let's say like you can't force it. You know what I'm saying? So if you wanna be smart at everything, not smart at everything, basically like you at school and stuff like that, you're struggling with maths, you know what I'm saying? So as the saying goes, they be like practice with perfect, you know what I'm saying? Practice with perfect. But I don't wanna say practice with perfect, it makes improvement basically. Makes improvement, right? So as we can see, right? So understanding from the fact that the market can actually break our horizontal line, but also come back. It also works as a fake out. Right? It's a fake out. It was trapping people because a lot of people sold over here and probably their stop loss are like just above it. Stop loss hit, the market goes in that direction, right? I'm saying, and then the market breaks out. When the market breaks out, waiting for a retest or continuation to indicate that we're looking for what we're looking for buying opportunities, right? So I'm not trying to dwell more on what the market did long time ago. I'm just trying to focus on what the market is doing, right? As I told you, refresh chart and go back 4 times. Right? Go back 4 times. full times, right? As you can see, judging from the current market price, you can see that we have this very beautiful bullish trend in the market board, and if we can close that and cater for the upside, we can generally see. So we can see that our bullish trend is not yet completed, but we can see where the market is. Right? So judging from a 4 hour perspective, we can literally see that we generally marked out everything very, very perfectly, right? Because we understand the fact that the market can break our horizontal line, but it also has to respect this, right? So every time when the market breaks our horizontal line, we have a backup, basically, right? Because the market can break our horizontal line, and then you would not be shaken to enter that buy, right? Because a lot of people, right, in this particular scenario, right, in this particular scenario, right, they probably saw the market breaking out, right? They probably saw the market breaking out, and then they took a buy, right? Because the market broke out of our horizontal line, they took a buy, stop loss. Maybe they put it like around somewhere around these areas, right? For stop loss, TP, I don't know where they put it at, right? Because they saw, oh, the market broke our horizontal line, it broke our strong line support, what the fuck, or resistance, the market broke that. That means that the market is buying, they put their buying opportunities, and boom, the market goes down. And then now they're gonna be like, yo, the market is going against me, what the god, dude, oh, this is scared. That's where a lot of things start from, you know what I'm saying? You don't want to understand the basics. You just want to jump. You just want to jump the gun. You just want to jump. You're skipping the demo. You're skipping whatever. You just want to quickly fund, make money. That's it. Like, you must just understand the fact that don't rush trading a live account. You shouldn't rush trading a live account. Don't rush it. Don't rush trading a live account. Don't rush it at all. You see, the process of trading a live account needs psychology, like a very, 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 very solid psychology. You know what I'm saying? Like, I'm not even gonna knock you or even lie to you, right? Trading a live account requires skill, and it also requires mindset, right? So if you haven't fixed your mindset as yet, how would you be able to manage blowing an account? How would you able to manage blowing an account? How can you fix your mindset, right? I'm sure probably people are asking themselves that, how can I fix my mindset, right? Either you test yourself with like the million test, right? The test of maybe being like, okay, I want to read a book, or I want to go to the gym today. Maybe like you don't want to go to the gym. Said, or maybe like I want to wake up at like 5 or 4 in the morning and record YouTube videos. Right? It's one way to fix your psychology. Right? It's one way to fix your psychology. That's what I use. Or maybe like taking a cold shower. It's one way of fixing your psychology. You know what I'm saying? So test yourself with like a million test. But anyway, let's go back to the video. Going back to that video, right? So we're just looking for our support and resistance areas, right? We're just looking for support and resistance areas, right? So the support and resistance areas should have 3 or more touches, right? As you can see right here, 3 or more touches, right? We have 3 or more touches that are well catered off, right? So these actually used as fake outs, right? A lot of people it's fake outs to stop a lot of traders, right? But as you can see, if we had to mark our support and resistance areas, we can generally see something like this. As we are marking our resistance and support areas, so if you have to mark our resistance or support area, right, look at the weak rejections that the market created. Use that as implementation or as guidance of where your support or resistance area should start and end. Right? Use it as a background basically or a strategy in other words. Right? Use it as a strategy in other words to basically understand where the market is going. Right? So let me print out just a few scenarios of what support and resistance is basically. Right? So support and resistance. So let's start at support, guys. Support is something like this, right? Either being stuff like this, maybe like you put your horizontal line, either being stuff like this, with your horizontal line, and maybe the market is ranging in this. The market is just ranging like this, right? The market is ranging like this. I'm just creating like scenarios, so it's not actually how the market moves, but I'm just creating scenarios, like random scenarios. I'm saying. So maybe like the market is moving like this, or let's let's switch it out, right? Let's switch it out and let's create it as if the market is coming from this point over here. The market is coming from this point over here, right? It's coming from our support area. As you know, we buy low and we sell high, right? Currently we at a low. Currently, right? And then the market is moving. So we all know that we buy where? We buy low and we sell high, right? We buy at our support and we sell at resistance. We buy at support, we sell at resistance. Right? I hope everybody is taking this down. Buy at support, sell at resistance, right? So this is our support area because the market is above it. It's our support area. If the market is below it, as you can see, our horizontal line is above it. If the market is just coming up like this and it's below, right, it's our resistance area, right, becomes a valid resistance if the market actually turns and goes a different direction. Then it becomes a valid resistance, right? But if the market just breaks through like that and then comes back to retest, it turns it to be what? A support, right? Because now the market is above that particular area. It turns it to be what? A support area, right? It only becomes valid if the market does what? If the market turns, then it becomes valid, right? So hope everybody's learning a thing or two about support and resistance. So all I'm saying, support and resistance, it really comes in handy. So please don't take this lightly. Like about support and resistance, please don't take it lightly. So as you know, as I told you, the first charts go back 4 times. Yeah, as you can see, now we're just looking at the current market price, right? So judging from the price, starting it from below, as you can see, the market created a low, right? The market failed to turn over here. The market broke above it. So as the market broke above it, right? As the market broke above it, we buy. We bought, and then we target maybe like your new support or resistance area. Or if you want to swing the trade, you just swing it up to the end or swing it up to here, right? Because that's a very sensitive area. Swing it up to here, stop loss, keep it maybe like around, right? Oh, simple. You can easily capitalize, right? So let's judge from over here. Right? So the market is buying, or the market failed to sell, the market was just creating like weekly rejections, the market failed, the market broke out. Right? As the market broke out, oh no, we coming to our what? We coming to our resistant area. What are we gonna do over here? Are we gonna turn or are we just gonna buy? The market breaks out. Right? The market breaks out. Now the market is a buy. So it turns it to be what? It turns it to be a support area. It turns it to be a support area. When the market is above, it's a support. When the market is below, it's a resistance. Simple, as I said. So as you can see, right, the market created some sort of a double top formation. As you can see right here, the market created some sort of a double top. Right. As I told you that you use your weekly rejections as your guideline, as you can see, except for this rejection. The market formed a double top formation. It failed to mark the lower high, lower than the previous high, right? As you can see, we have these are those, right? So, right? As you can see, and if we can shade or if we can take a vertical support trend line, we can basically come with something like this. Right? This is something like this, and if we can cater for our high, right? These are our highs. These are our right? These are our highs. If we can cater for our high, come with something like this. Let me show you right now. Let me show you if you can come with. So we connected our one, we connected our right, but our high is not that valid, right? Because it has one touch only. It has one touch only. All I'm saying is you can use this also as is going on where it's about to go. So let me zoom in closer to basically show you what I'm trying to say. Right, as you can see right here, the market failed, formed something like this, formed some sort of resistance. As you can see, guys, market failed to break. Market failed to break, the market sold. The market came back, the market sold again. Very sensitive area, right? So that's what people are thinking. No, it's gotta be a very sensitive area. The market buys, the market fails a little bit, and then the market gains strength to basically break out. Right? Now we put it in our watch list basically, right? Put it in our thought process, be like, we also gotta look out for this area over here. The market comes back. Oh no, the market is coming to that area. What are we gonna do? Are we gonna break below and retest for it to be what? A resistant, or are we gonna buy? The market comes, the market fails to buy. The market creates immediate rejections, the market is failing to buy. Right? The market is failing to do what? The market is failing to buy. Right? Easy. Boom. We take our buying positions, we target our high that the market formed, and stop loss, we keep it just below. Stop loss, we keep it just below. And trade. Simple. Just by using what? Support and resistance. Right? As I told you, your area needs to have 3 or more touches to be a valid area. Right? So guys, please just hit the subscribe button and the notification button. Next time I drop. But This is a cool risk reward ratio. Right? I'm risking 0.69% to gain 3.08%. That is a lot, bro. So as you can see, right, the market is currently, so now we're looking at the current market. Market's currently at a low. As you know, we buy low. Sorry, it's a buy low. And told you it's very see the options over there. Right, so a few options, whether being the market buy or the market is going to sell towards the downside. But as you can see, judging from what the market is doing, right? As you can see, the market is failing to buy over here. The market got momentum and then actually broke out. Right? So as you can see, the market came back to retest. The market failed to sell. Right? The market failed to buy. The market bought. Then the market failed to basically break this high. The market failed to break this high. As you know, you gotta go back down to gain momentum. Right? To gain momentum to do what? To buy. The market failed to go back down to gain momentum. As you can see, the market is failing to basically buy. Right? Because as you can see, the market is creating lower highs. Right? It's creating lower highs instead of higher highs. Because all you know, in a buy trend, the market creates what? Creates higher highs. As you can see, a high low, right? High, high low, high high, high low, high high, high low. The market failed to form a high, right? So we had to form a high low. So it's up to what the market does over here. Whether the market is going to respect this area over here and sell, or the market is going to buy and break. So as you know, we are currently below our area. We're currently below our sensitive area. So it's up to what the market does, whether being the market is going to sell or being the market is going to buy. So, right. So we do not chase the market, we actually follow it. Right? So we don't chase the market, but we follow it. Right? So I told you that it only becomes a sensitive area if the market does what? If the market goes into another direction. Then it becomes a sensitive area. Right? So as you can see, the market is slowly rejecting, but I'm not gonna take it as a sell. I'm not going to take it as a sell, I'm going to take it as a buy because the market formed a high. I mean, it formed a low, sorry. Right? The market formed a high, and formed a high, right? And failed to form a high, right? Formed a double top, right? The market failed to break this low that the market created, right? Because all you know, if the market breaks a low, then it's a clear indication that the market is going towards a downside. Right. So as you can see, the market rebounded off our very sensitive area. As you can see by this right horizontal line, the market failed. Right, from there, the market failed to basically break it. Right. As you can see, the market failed to break it. So now we're just looking for what we're looking for. Right. As you can see, if we can connect our bars of our lower highs, right, we can generally come with something like this. Let me go into the 15 minutes or 30 minutes. Show us. We can come with something like this. Right. We're connecting our lower highs. As you know, every time the market gets on a trend, there validating if the market buy or the market gonna sell, right? What I'm seeing for gold is that we have two options. Just over here, come back down and fail to break, buy, or maybe the market is just gonna be some sort of a double bottom, I mean double confirmation, and then go to the past. So what I'm saying is just market and let's see what the market does. So we have two options. Two options. First option being a buy, second option being a sell. Right? But what I'm just gonna say is let us wait for the market next. Let's see how the market plays out. As you can see right here, the market trend, a very small trend, and with the market breaking out of a trend, it requires a lot of pressure. Right? As you can see, we just gotta wait and targets are up over here and stop loss. We just keep it over here. And yeah, we just gotta wait for the market to see what the market plays out. But if I'm gonna set like my TPs, whether it being TP1 or TP2, we just gotta look for some sort of like a support area or resistance area. As you can see, looking for areas that have few more touches, right? Looking for areas that have few more touches, or areas that are most likely to be sensitive. As you can see right here, this is also sensitive. Right? So I know that if I'm holding my buy and then and the fact that okay, this is sensitive area. In other words, whether it be an exit out of my buy and take a sell, or I just ride the whole buy and then let's see what the market does. But what I'm saying is, gold, we are looking for buying pressure if the market doesn't uh, to basically break this. Just gotta wait. So I'm gonna save this. I'm gonna take a picture, a screenshot, and I'm gonna post it. So let's analyze another. Yeah, let's analyze another. Okay. I have another thing. The market just opened now. It's like 1 o'clock. Let's go. Yeah, gold looks like a buy. But we're gonna have a clear confirmation if the market breaks this high over here. So once the market breaks this high, it's a clear confirmation of that buy. Yes, but the market doesn't come back to meet it. But other than that, if the market buys out, we're gonna take the buy above it. Gonna be the two, but let's check genuine density. So from the perspective, you can see that genuine density has been buying for the month. To the upside. That's right. I'm connecting my lows. Can connect and also connecting my highs. You can see that we in some sort of a white double bullish trend, right? So if we can connect our highest point with this, which will be right here, right? You can see that the market is getting from this table. So scaling down to a daily time frame, first chart, and I told you, go back 4 times, and you can see what right. So going from a line graph and basically nothing. sensitivity, marking areas that are doing touches. You can see that sensitive area, really beautiful area, that was beautiful. So this was a very sensitive area. That's very sensitive area. Very this area. So I hope everybody is actually seeing that not marking what the market is already printed like a long time ago, way like over here. I'm still like looking for my sensitive areas now. I'm looking for my sensitive areas in the current market price. But I'm not looking for what the market is already printed a long time ago. I'm just looking for my sensitive areas near the current market price. Right? So I'm looking for them near the current market price. So as you can see, we're just marking up my sensitive areas. So that wasn't sensitive. That requires this here. Right. So we have marked it out here. Let's put this one because this is like two touches, right? This is like two touches, right? So going back to our candlesticks, you can see that the market is looking for some sort of bullish trend information, right? We have to connect our futures. We can come to something like this. Right. We can see that the market has been forming some sort of bullish small trend. Bullish small trend inside the overall bullish trend. We can see something like this. Market is mixing our lows and our highs. We can come up with getting down to the 4 hour. Getting down to the 4 hour. Pushing your trap first and then to and looking at the current market, right? We can see that the market creates a lot of fake outs. A lot of fake outs actually. So as the market is creating fake outs, we should basically understand how to go around those fake outs. Because a lot of people thought this is sell basically. A lot of people thought this is the sell, but only for them to know it's just a fake out. Only for them to know it's just a fake out. The market is just trapping people, and yeah, they could have easily felt target. And felt target to that. So all I'm just saying is understand that the fact that the market is not going to be perfect, the market is going to fake. A lot of people out, the market is going to fake it out and stuff like that. So what I'm just trying to teach you is go with the trend, don't go against the trend. Right? Go with the trend, don't go against the trend. Right? You can, if you like to mark our areas, you can basically see that. Moving with price, you can see that the market formed. So, right, and you can see that the market is forming a low and from the high low. Right? So the market it's a clear indication of what? Of buying pressures. It's a clear indication of buying. We have to connect our lows and our highs. Right, we have a bullish small trend to our upside number. Right, so understanding the fact that this is a very sensitive area, So what the market does over here will be a prediction of where the market is leading us to. Right? So my opportunities is wait for the market to basically break out of this horizontal area and target maybe being like this area over here, this area over here, either one. But as we are catching the whole trend, because the overall trend is a buy, and catching the overall trend, we just gotta wait for the market and see what the market plays out. But yeah, just gotta wait for the market. Let's see what the market does. See what the market plays out. But either option, my first option is this. So this is my first option. It's a straight breakouts to the upside, and my second option it is something like this. It's a buy that the market is come back like this. But my other option is a buy first, and so that's my second option. Right? I have two options. So I'm gonna screenshot this and I'm gonna show it in a road, show how the market played out on the pairs that I analyzed and show, but you should please be sure.
Okay, bye.